Hi, how are you? This is the first of many videos to come where I watch the videos, write down the important stuff, and then combine it all into a presentation for you to save your time. I'll summarize what they said, but my own input will be in there as well. You choose what to do with the information, and you can ignore what I think of it if you want to. I view myself as a student and a teacher, not a salesman, so rather than disliking, perhaps you could teach me where I went wrong. Also, a thought occurred to me right before I fell asleep a couple nights ago. If the majority of day traders fail, shouldn't we separate ourselves from the most popular and overhyped trading ideas? Alright, let's get started. Do not use retracements when the price is consolidating. It only works when there is a trend, because there is nothing to retrace when the price is choppy. I'm not trying to be mean, but that's the only thing I got from this. Basically, retracements only work for getting entries during a trend, since it's better to wait for a pullback, rather than just dive in because you're scared of missing out.
Is Fibonacci just a load of old hocus-pocus, self-fulfilling nonsense, or does it indeed hold relevance in today's markets? Well, I'll let you be the judge of that.
Right, so he doesn't answer the question, but here is what he did say. He claimed that it's good on the daily, weekly, and monthly time periods, not so much for intraday trading. Do not use it as a standalone indicator. Use it in conjunction with price action. I'll be the bad guy and translate this into being helpful rather than saying what people want to hear. Fibonacci isn't statistically significant, so you can't just use it to trade. However, when the price action looks good for a trade you would take even if Fibonacci didn't exist, use Fibonacci as confirmation bias. In other words, use it to make yourself feel more confident about a trade you were already going to take. I don't think he wanted to say this because he didn't want to offend the Fibonacci fanboys, which are probably a big part of his customer base. I, however, am not trying to sell a $567 per year product. These guys might be great, and I'm not trying to put them down if they are providing a valuable service. I'm just saying this because being a salesman and an educator is a massive conflict of interest, and salesmen tell you what you want to hear, rather than the whole truth and nothing but the truth. If I was a car salesman and I told a customer, that car is a piece of you-know-what, I'd probably get fired. Just keep that in mind when you are trying to learn something from people who are there to sell you a product. Fundamentally, charging money for a course isn't necessarily bad if it's a good course. In conclusion, retracements are significant on high time frames, but don't use them for intraday trading. Also, don't use retracements as a standalone indicator. Only use it as confirmation bias on a trade you were going to take anyways. Perhaps I should start making my YouTube video titles like this. Get a bunch of people to click on it because they think I'm about to say something controversial, and then end it with,
Well, I'll let you be the judge of that.
this video starts off brilliantly.
Now remember, almost 90% of retail traders lose money in trading. So instead of believing other people, let's look at the real data and understand how Fibonacci actually works.
That's something I've been thinking about a lot as well. So many people give up on becoming traders, but so many people say things as if they are experts. I'm going to plug my cognitive behavioral guide here, since I believe it's as helpful as I can be in regards to psychology. For example, so many people are obsessed with Fibonacci retracements. But how many of these people have been profitable for 2 or more years and trade as their main source of income? All I'm saying is that it's strange to me how many strong opinions exist on this topic, but I wonder how many of them can be backed up. Remember, emotional reasoning is a cognitive distortion. Feeling like something is true does not mean that it is. Sometimes it's hard for us to make this distinction. I talk about it in depth in that video. As you can see from this picture, this is a horrible trading strategy. The 38.2 retracement level had the greatest rate of success at 18%, which means that only 18% of the time, the price reacted at this level with any degree of statistical significance. He admits that trying this 100 times may be too small of a sample size, but I disagree. Sure, you could do it 1,000 or 10,000 times, but I doubt the results would be extremely different. For perspective, an 18% success rate requires a risk-reward ratio of about 1 to 5. This means that your average winner has to be 5 times bigger than your average loser just to break even, which doesn't include commissions. Take a look at this like to dislike ratio. He's spending his time to provide free education using an unbiased method. 7% of the ratings on this video are dislikes because he dared to say that Fibonacci is a bad system, which is the conclusion he comes to based on doing real testing. I'm assuming that people came to this video for confirmation bias and were upset that the video didn't confirm their beliefs. since I couldn't find anything wrong with the video. In this one, since VWAP doesn't have the cult-like following that Fibonacci does, only 1.7% of the ratings are dislikes. It seems like anytime someone says something bad about Fibonacci, the massive following of people who are mostly new to trading and aren't consistently profitable get upset. Okay, moving on. This is a long one. It's a 1 hour long webinar hosted by NinjaTrader. If you want to, and I won't be offended, you can skip this one and go to the next video if you get bored partway through. I thought this would have good learning points, which is why I watched it, but it's just a giant sales pitch that seems like a scam. Basically, I just criticized the insanely absurd things she says, and there's not much to this that's actually helpful. Okay, this is a screenshot of one of her slides. She claims that Fibonacci is a naturally predictive tool, whatever that means, and she lists these examples. Just so we're clear, there are more instances of the golden spiral not happening in nature as there are instances of it actually happening. What I mean by this is that not all spirals are Fibonacci related. There isn't just one sequence of numbers that creates a spiral. And she put continents? Really? There is zero physical significance for where that spiral starts. I actually looked it up. It's in Wagadobe. It doesn't even stay on land. It goes into the ocean several times. It completely cuts through Somalia on the right, and we're supposed to believe that 0, 1, 1, 2, 3, 5, 8, 13 has some sort of geographical power that shapes the world itself? Ignoring the parts of Africa that void our belief of Fibonacci having continental significance is the definition of confirmation bias. Fibonacci is not a naturally predictive tool. It's the most efficient way for some plants to grow so they can absorb the most sunlight. But there are more plants that don't do this than there are plants that do have these numbers. The shape of continents are determined by tectonic plates, weathering, erosion, and more. Pangea was not a golden ratio, so we can't just wait millions of years for a chunk of land to become a shape that is vaguely related to a spiral. In other words, it's scientifically invalid to choose a relatively small amount of time out of Earth's 4 billion years of existence, point at one relatively small piece of land out of the entire planet, and go, look, Fibonacci can be found in the continents. Sorry, that's just so ridiculous. Also, I'm not sure what she's referring to when she says triangles present in nature. Maybe that's in reference to the shape of leaves? Spirals are curved, meaning a triangle is impossible since one side is curved. Maybe I'm missing something though. And if you start the spiral in her nostrils and then move out, you can go along the top of her head and then end up in her sleeve? What is that supposed to imply? If you resize that spiral, you can get it to match up to anything you wanted. So it's just complete nonsense. You can't just resize a shape until it fits what you want to see. Sorry. Moving on. This is how she compares Fibonacci to indicators. She claims that Fibonacci is naturally predictive, can be used on any platform, any instrument, and any time frame. So this is very conflicting with the previous videos. Also, it's different from indicators because it's a mathematical sequence. She says that indicators are delayed, artificial, can only be used on specific platforms and timeframes, and that fees vary. Which one of you is paying for an indicator? I'm pretty sure the 200 EMA works on all timeframes, and I'm not aware of any respectable platforms that don't have moving averages, MACD, RSI, or at least one of those. I don't like indicators, but to say that they are artificial is strange. Most of them are calculated using market data, so unless the market is fake and we're living in a simulation, indicators use real information. But we have much bigger problems to deal with if we're in a simulation. After this, she continues to show examples where she predicted exactly what would happen.
What did I say? This is exact same thing I said about multiple instruments. No ifs or buts about it. How did I know? Simple. Fibonacci said so. I said so in 2016 that this collapse will end here. Did it collapse from this level, 1300 to here? I said so in 2016, my goodness. How did I know?
Sounds like a sales pitch to buy her course. Here's a picture. That purple line called decision point 1 at 94.13 just looks to me like a basic support level, not some magical Fibonacci predictor. This is something that Trading Rush talked about in the video earlier, and I recommend watching his entire video. The times where Fibonacci worked was when it was just from pre-existing support and resistance levels. Apparently the problem with indicators is that they only work sometimes, so I guess she's implying that this isn't a problem with Fibonacci? Sounds like a bunch of bullshark to me, if you know what I mean. Once again, we have a picture where Fibonacci supposedly predicted the reversal. However, we clearly have an instance of support, or you could also consider this a demand zone in the sense that there is perceived value at this area of price. Look, I can draw stuff on a chart that already happened and show you what you should have done too. She claims that she knew where the S&P 500 was going years in advance because of Fibonacci, so she must be the richest person on earth.
No ifs or buts about it.
Why have I never heard of her? Sorry. This video was supposed to be just a summary of different videos, but this is just getting ridiculous.
This is how market moves.
No, it doesn't. You just do not get perfect 50% retracements during an uptrend. You don't. I'll use Trading Rush's video as a reference, and then I'll also use Basic Logic, because I have a brain, as my source to say that markets don't perfectly move like this. This is the problem with those chart pattern videos, which will be a different video. You do not get perfect examples in real life. Trading Rush also demonstrated how the 61.8% retracement doesn't work either. Okay, I'm actually going to call it here. There's a few minutes left on it, but this entire thing has just been a giant I told you so. I'm pretty sure that what I just watched was just a big sales pitch to buy her insanely expensive course. Maybe I just don't have an alpha brain though. There may be some people who have been successful with this, but I'd rather get back to some good quality videos. Take a look at the pricing options she has and then let me know if you think her presentation was 100% honest instead of falsely portraying the simplicity and the effectiveness of a system that you have to pay to learn about. Was that a run-on sentence? Yes. Do I care? No. Once again, I'm going to bring up how paid education in the world of finance is a massive conflict of interest. How can you be a good salesman and a good teacher while telling the truth? Honesty reduces sales, and omitting parts of the truth hinders education. Moving on. This one's great. It's called Highly Profitable Fibonacci Retracement Strategy for Day Trading Crypto, Forex, and Stocks by Data Trader, an awesome YouTuber. Now, this is a genuine question I have. I'm assuming that the presence of institutional traders is very low in crypto. In crypto. So do you think that self-fulfilling popular trading systems like Fibonacci work better in crypto, since the people who move the price are retail traders? Let me know what you think of that. He starts it off with this picture, which shows the pullback ending at prior resistance. This is great, but don't let charts fool you into thinking that timing when to get in is easy. Most people are better off trend trading on shorter time frames than trying to pinpoint a reversal. It's tricky, but it can be done with a lot of experience. Daytrader Next Door is a YouTuber I've talked about who is amazing at doing this, but he's been trading for a long time. I know that his style of trading will be out of my reach for a long time. This image shows how the retracements were drawn from the pivot low up to the pivot high, and the market crash reversed exactly at the 227.2% Fibonacci level. That's certainly very interesting. Hopefully, the people who are trying to time catching this falling knife didn't get in at these 7 other levels. Did you notice that it similarly bounced right off of 127.2, 100, and 78.6? But it continued to fall after that. That shows you how tricky these levels can be. Fibonacci levels implied it bounced 3 times before it was correct. I don't know about you, but that's not good enough for me to consider implementing into my trading. It's just wrong far too often. The first step of using retracements during a clear uptrend is to start at the swing low and end at the swing high. Since this is a retracement of an uptrend, the top line says 0 because it's the start of the pullback, and the bottom line says 100 because it implies a 100% retracement all the way back to the swing low. He also only uses the 38.2%, the 50%, and 61.8%. These are just some of the options for choosing which levels to use, and the ones selected are the levels that he says are best. The numbers higher than 1 are for extensions past a 100% pullback, like in the S&P 500 image. I'm very glad to hear him say that the reversal will happen in a general area rather than perfectly off the line. I needed that after listening to the previous video where she just says I told you so the entire time. Here, he says that the price was respecting the 61.8% level, the bullish engulfing candle was a good sign, and it got above the 50% level. So he says that this is a good buy signal. I would also like to point out that if you just draw a little zone from where that previous resistance was, when the price came back down, it almost bounced off of it. So was this actually Fibonacci, or was this just previous resistance becoming support? A little disappointed that this wasn't mentioned, but it didn't come back all the way, so maybe he intentionally left this out. Thankfully, he immediately restored my faith in him by showing this. A reversal not from Fibonacci, but from support and resistance. You could also say this is an area of confluence. No, not the junction of two rivers. I mean an instance where two different trading ideas work together to give us the same signal. Prior resistance becoming support, and the not real 50% Fibonacci level. Also, fun fact, did you know that fib means a lie? In this image, we have another instance where it was rejected at the 50 level. Don't worry, I'm done saying that 50 isn't a real Fibonacci level. Well, I guess I'm not, since I just said it by saying I wouldn't say it. Anyways, rejection at 50, and then another instance of an engulfing candle. Candle patterns will be a topic for a different video. If you haven't noticed, his examples are very specific. If you want, you can go to a chart and see how rarely these setups happen. Kind of hard to be a day trader if your setup happens once a month. This is getting closer to swing trading, which ties into what the other people were saying about Fibonacci only being significant on the higher time frames, which would mean that it would be better for swing trading rather than day trading. To summarize this particular video, Fibonacci levels should be used as zones rather than lines. Yes, zones like in supply and demand. He also recommends finding the long-term trend by using the 200 EMA, waiting for confirmation, and combining these levels with support and resistance. He's a very respectable YouTuber. I'm not sure if he actually trades or just makes videos, but this video had nothing about just Fibonacci levels. So to me, this is further confirmation that Fibonacci only works as confirmation bias for price action and market context. It can make you feel more confident about a trade you're going to take anyways, but it's not good enough to be used by itself. If you'd like to watch the videos yourself, and I recommend a couple of them, definitely not the webinar. They're in the description. I'm anticipating some dislikes, but I'm here to help, rather than say Fibonacci is the best trading system in the world, and then give you a link to a $200 course about it. The market is more complex than a cool sequence of numbers. But if you're still listening, you already know that. Most of the people who will be upset by me not worshipping Fibonacci will have clicked off a long time ago. I think that deep down, we want to believe that the universe is organized and that there is order among the chaos, which is why we want to be able to reduce nature into a universal sequence of numbers. Unfortunately, science says that's not true. Fortunately, we can aspire to be much more than a single life form on a giant rock floating through a universe of unfathomable size which keeps expanding at an exponential rate into an area we can't detect. But hey, what do I know? If you've been profitable with real money for over a year, you trade as your main source of income, and if Fibonacci is a huge part of your trading style, please teach me where I went wrong in this video. I'm always open to change my mind. In fact, I look forward to it. I will be doing this style of video again with more Fibonacci videos, and I will be expanding to other trading styles, ideas, and systems as well. And, of course, loads of psychology is on the way. Until then, thank you for all the support, and have a great rest of your day.